In this question, you are being asked which of the following could explain the imbalance. The imbalance that they are talking about is that Bumbly has extracted the trial balance for the year ended 31st of December 20x7 and the total of the debits exceeded the credits by $300. Therefore, what we're saying is in our trial balance with our debit and our credit balance, we have got an extra $300 on the debit side in comparison to the credit side. Looking at the options available to us, the first one tells us that irrecoverable debts of $150 were credited to receivables. When adjusting for an irrecoverable debt, we are going to debit our irrecoverable debts account and credit our receivables account. And so it's perfectly fine to have credited that account, and this will have no impact on our imbalance. The next one says that sales of $300 were omitted from the sales daybook. If they were not included in the sales daybook, then it means the entire transaction didn't happen. If this transaction had been included, it would be a debit to the receivables account, potentially a credit to sales tax, and a credit to revenue, and so would have no impact on the imbalance. The next issue is looking at discounts received. They told us that discounts received of $150 was extracted to the debit column of the trial balance. Discounts received arises when a credit purchase is paid for promptly. They will therefore pay less than the invoice value. In order to deal with a discounts received, you would debit the payables control account and credit the discounts received account. The discounts received balance should be on the credit side, and here it's been extracted on the debit side. Therefore, visualizing what's going on here, it would have been put on the debit side in the trial balance. In order to remove it, we will need to credit to eliminate the balance and then put it in on the credit side. Therefore, this does explain the imbalance on our trial balance. The final issue is looking at the bank ledger account and the fact that it did not agree with the bank statement by a debit of $300. This is looking at the relationship between the bank ledger account or our cash book and the bank statement. These may very well not agree due to timing issues, and this is all dealt with in a bank reconciliation. As a result, it will not have any impact on the imbalance relating to the trial balance. Therefore, reviewing our options and deciding which of the following could explain the imbalance, the correct answer is the third option.